big food companies work with startups to accelerate the innovation process? And where do corporate venture funds fit in? I'm here at Future Food Tech in London with Richie Gray from Mondelez International.
When we first launched SnackFutures, it was predominantly an innovation group. We had two separate pillars actually. There was Invent and there was Invest. And really 95% of the focus was on Invent, where we really tried to work as an internal startup ourselves, also partnering with other startups to drive the new innovation agenda where we were developing new brands in new categories. So very taking us into different spaces for Mondelez. The team developed some really interesting brands, some good concepts, all in the right strategic spaces actually. But where we struggled was when it came to actually commercializing. We launched a lot of products, but we struggled to really bring them to life because we rely on our business units to do that, and our business units had bigger businesses, bigger brands to focus on. So meanwhile, we'd made some small investments, a little bit sort of speculative in a way. So when I took the team over, we agreed that it was right to wind down the innovation side of things, but to take all that learning of understanding how startups operate, to use the strategy that had been created in terms of the spaces that we wanted to go into, but to really buy in the expertise, to invest in small and later stage businesses actually, where we felt that they could actually do it better than we could, but with our help, our support, as well as our capital, together we get to something that's more scalable and more successful more quickly. We don't have a fixed fund. We don't even have a set number of investments that we choose to make, and that's very intentional because we want to scan the market. We're engaged in the various ecosystems and the different markets in which we look to invest. And then we kind of react to what we see. And if we were to put a fixed number on it, whether that be in terms of amount of capital that we invest or the number of investments we make, it might force us to make some investments that might not be the right ones. So everything is assessed on a case-by-case basis. Our investment comes off our company balance sheet. And we're highly strategic in how we do that. So we're not really, we don't operate like a financial VC from that respect. It's really about, we know the areas of interest to us, but we'll invest when we see the right business that we think can really fulfill our objectives.
So how quickly can you move? What's the approval process like to sign off on an investment?
It's really short. We're quite diligent ourselves with the team and myself, so we're our own worst critics in a way. You know, we rule out an awful lot of what we see, and when we eventually do decide to put a proposal forward, I have a very lean investment committee which consists of our CEO, our CFO, and my immediate boss, who's our Chief Strategy Officer. So it's a small group. We give an initial consideration. Are we interested in this business? And if the answer to that is yes, then we'll do full diligence, and then it results in an investment memo and an approval. That process is quite a short process. It's weeks, not months.
Right. Okay.
So we pride ourselves on being quite efficient from that point of view. A financial VC might be quite happy for a business to grow in value very quickly, but max out at a certain level, and then they can exit and get their financial return. To us, the exit point ideally is the point at which we would acquire. Now that won't always happen, obviously, so we kind of keep it flexible, but that's how we're really investing in a brand with a view to it becoming fully successful and then us acquiring further down the track. But we do also invest in enabling technologies, and that's not really about ownership, that's more around investing in order to get access to a technology that we can see being applied in our business to make us more competitive, more innovative, but also where we know that we can help that business scale with our expertise, whether that be from our R&D teams or other parts of the business. So I think it's the strategic aspect of what we're investing in, and knowing that we see those businesses playing a role within our own business rather than just looking at the financial return.
Do you have kind of first refusal on investments? So if somebody is interested in acquiring, a company you've invested in, do you kind of get first dibs at it?
Really depends. It's
Yeah.
not something we insist on.
Yeah.
We're quite flexible with our terms.
Yeah.
Sometimes we think if we're going to put a lot of money and a lot of resource into
Yeah.
helping a business, then maybe that we might want to have certain rights that create more security for us. But we also recognise that a founder needs to keep themselves competitive, and we want them to be able to raise
Yes.
other finance with
Sure.
on the market. So we don't like to lock in
Yeah.
our portfolio companies, but we do like to have certain rights that
Yeah.
that are kind of in recognition of the value that we bring as an investor.
Yeah, absolutely. How do you kind of manage expectations on both sides, at the start of deal talks, and then how do you work with your portfolio companies subsequently?
I think the managing expectations is a really important one, and something that we're learning about all the time, quite honestly. It is really important to understand, to get clear how we're going to work together, to know that they can feel good about how we will operate, and we feel good about the kind of cultural fit and the coachability of the founder, and how that dynamic can work. It's important to kind of get those things out on the table very early on. And then the way we operate as we then get into an investment with a portfolio company is we're very hands-on. We don't control, obviously, we can't. We take minority stakes. We'll typically take a board seat if we believe that that's in the best interests of the founder and the company. But more importantly, we bring our expertise and our resources to help a business. And that can be, it comes directly from my team, but also from other Mondelez functions. And it's wherever we see the need is most within a business. Often it's within R&D to help them develop their technology and improve their quality. Sometimes it's in sales, helping them open doors to get distribution. Sometimes we even create gig jobs within our portfolio companies that Mondelez people can go and say work with a company for 2 days a week, and we quite often do that in marketing or other functions. The climate is a difficult one. There's a lot of volatility in the world right now, geopolitics, regulatory, fast evolving consumer behaviours does make the climate tricky, and there is, because of that, I think investors are more cautious, don't want to make the wrong call when things might very quickly change. So I do see caution in the investment climate, in the investment world. From our point of view, that caution applies to us as well. We're very careful about where we choose to invest our money. We want to feel confident that our investments are going to be successful. But we feel great about the pipeline. We're well immersed in the innovation and startup and investment ecosystems, especially in the US and in Europe. We see a lot of, we pretty much see all the deals. That helps with the partnerships that we have with VC funds and with other scouting partners that we have. So we feel good about our pipeline. Yeah.
You've got an open innovation team, and Mondelez also ran the Collab Tech Accelerator for a couple of years, and then this year you've joined the 100+ Accelerator. I mean, how do these relate to SnackFutures? Do they serve as a potential kind of pipeline, or? It's
really a network of things. So open innovation, Collab Tech are almost an extension of what SnackFutures does. We work very closely with the R&D team. We have an R&D team that's kind of attached to SnackFutures, and we're constantly sharing back and forward and working together. So we would get involved in the open innovation agenda. When we see, especially on the tech side of things, when we see really great technologies or businesses, we might want to invest, but equally we might want to create other types of partnership, whether that be offtake agreements or joint development agreements, material transfer agreements, and often the team and me will broker that and then kind of facilitate it for the R&D team to then get involved. And with Collab Tech, SnackFutures created Collab as an accelerator concept. So, and we focused initially on brands, but the work of the R&D team in running Collab Tech, it's like an extension of the Collab brand, really. So we remain very heavily involved in that.
when it comes to the types of companies that you're interested in, especially around like enabling technology, are there some particular areas or themes that you're focusing on?
In brands, we stay quite open because we want to find the disruptors out there that can really make a difference and be game changers in snacking. When it comes to technologies, we're quite focused as to what we're looking for. In food tech, it's alternative ingredients, and in particular, we're very interested in the whole cocoa landscape for obvious reasons. So we look across cocoa alternatives, across other technologies and businesses that are working on improving crop yields or anything that's related to building resilience in the cocoa supply chain is of interest to us.
So one of your investments is Celeste.
Correct.
Bio,
we invest in Celeste Bio, cell-based technology to develop cocoa from cells. Still very early stage. We feel really good about where that business is going. It's a very interesting space, but there are other spaces within cocoa that are also interesting to us. And then we also look at other alternative ingredients that can help improve the nutritional profile of our products, whether that be sugar alternatives, alternative fats and oils are also interesting to us. But on the other end of the technology spectrum, we're also looking at AI and other enabling technologies that can help deliver a more efficient supply chain or better consumer experiences, even in packaging. To help us on our sustainability agenda in packaging, we look to packaging technologies as well. So it's pretty broad, but we know we're quite clear on what we are looking for there.
Do you think big food companies have kind of struggled to find the right models and structures to facilitate innovation?
Everyone's doing it differently. I think the need to innovate is slightly different across all the different companies, actually. And sometimes it can be a little bit cyclical as well. Sometimes there's a need to focus. We found during COVID, for example, it made sense to really focus on our core, make sure that the basics were done brilliantly, that our core range was available for consumers in the right format, in the right place, at the right price. But post-COVID, clearly it highlighted a need to drive additional growth through innovation. So sometimes it can be a little bit cyclical. I do think everyone's trying different models. I think there's a greater appreciation nowadays from everyone within the food industry of the need to use partnerships to get there. We can't do it all ourselves. And that's the reason we certainly engage a lot with the startup community.